Welcome back to another episode of Prosperity Playbook. You've got Courtney, Renee, and mostly Brittany today. So we're going to talk about health insurance. And I know that may not sound like the sexiest topic that we've ever done, but it's in the news a lot. It's kind of a hot topic. So I think it's a really important time for us to address that.
Absolutely. There are definitely some changes coming up with the Affordable Care Act in 2026. So we just wanted to touch on different types of health insurance plans, where you can shop around for different types of plans, and what might be the best fit for you. So we're going to try to make this short, quick, and painless. And then
Perfect.
if you need more information, you know where to find me.
Painless insurance is my favorite kind of insurance.
I didn't know that existed.
It does now. The main types of health insurance are going to be HSA plans or copay plans. HSA stands for Health Savings Account, and that is a high deductible plan. So when you have a high deductible plan that is HSA eligible, the biggest benefit to you is to open a health savings account wherever you bank. If you have an HSA plan and you're not utilizing a health savings account, you're really not getting any benefit out of having that high deductible plan. The way that those plans work is basically all of your preventative care is still going to be covered at 100%, but until you meet your deductible, you're paying everything else out of pocket. These are really great plans if you're healthy and maybe you're going in for your preventative care every year, but you aren't necessarily getting a bunch of prescriptions or going to therapy or using your plan for other benefits. But you also want to make sure that if something big does happen, you're not going to declare medical bankruptcy and you have a plan that can cover you. When you open an HSA account, you get triple tax savings. So your money isn't taxed when it's in the account. And as long as you spend it on healthcare related expenses, then it's not taxed. So super high benefit plan if you're a healthy individual.
And so a lot of employers have this for you, right? Where it comes out pre-tax out of your paycheck. So you're not paying any taxes on it there. And so you said you have to open it up at your bank. My company has one for me. So it's with like Fidelity or something. So they may already have it set up, or they may have to open their own.
If you get your insurance through like healthcare.gov, if you have an individual plan, obviously you're not going to have it through your employer, so they won't have that option. But a lot of companies, if you have an employer-sponsored health plan that's an HSA plan, they will oftentimes have somewhere, have an account that they are using for your HSA. And a lot of companies will contribute into your HSA for you or do an employer match or something.
Yeah.
So do you have to use all of the money that you deposit into the HSA that year, or does it roll over?
It rolls over. That's a great question. I get this a lot. There's something called an HRA, which is a health reimbursement account. And of course, it's very close in its acronym to an HSA. HSAs roll over year after year after year. There is an annual maximum that you can contribute to them. This year, it's $4,300 for an individual, or just less than twice that for a family. But if you contribute the max, basically at the end of the year, let's say you contributed all $4,300, at the end of the year, you can deduct you can reduce your taxable income by that $4,300. So it will give you tax savings there. And then you have that $4,300 in your account for the following year. I always recommend, best case scenario, you want to have as much money in your account as your health insurance deductible is. So if you have a $5,000 deductible, ideally you want to have $5,000 in your HSA account so that when it comes time to file claims and something big does happen, you're not trying to scramble to find $5,000. You already have it sitting in that account.
That's good advice. I've never thought of it that way. I like to spend mine right away. And I always am like, massages, sometimes you can use that for, or physical therapy. I mean, there's a lot of different things that you can use that money for.
Yeah. If you get referrals for acupuncture, massage, things like that you can absolutely use your HSA account for that. You can use it for eye doctor, dentist, etc.
Who do you need the referral from?
Your primary care provider.
Okay.
Yeah.
And does it have to be an MD?
Nope.
Who qualifies for a primary?
It kind of depends on the wording in your plan, but typically like a nurse practitioner can definitely make the referral for you. I have a nurse practitioner that I technically use as my primary care provider, and she wrote me a referral to go get a massage and acupuncture, and I was able to use my HSA for that.
If you have a health share, does it qualify?
It depends.
Okay.
Yeah.
And there's something called an FSA that's different, right? That's the one you
Exactly.
have to spend every year.
Yes, so that both the HRA and the FSA do have to be spent by the end of the year. Basically, if you don't use it's a use it or lose it scenario for those. HSA is the only one of those three that rolls over year after year.
Okay, so then let's talk about the copay plan a little bit.
Yeah. Opposite side of the spectrum is a copay plan. So, for example, you go to your primary care provider, you go to therapy, you go to a specialist, or you buy a prescription. You have a small out of pocket copay. Depending on your plan, it can be anywhere from $0 to $75, where basically, if you go into urgent care, they're going to charge you your $50 copay. You pay $50, the rest of the visit is covered. Now, these plans can be really sneaky because the copays do not contribute towards your deductible. So maybe you're getting therapy every single week and you're paying $20 every time you go to therapy. And you assume that you are chipping away at that deductible, but you actually haven't been paying anything towards your deductible. So they can be a little bit sneaky.
Yeah, I didn't know that.
Yeah, so you're paying less day to day. And these plans feel really good if you're using your plan a lot. They feel nice because you're paying less out of pocket day to day. So you're seeing your plan work for you. But let's say you're going to therapy every week, you're getting prescriptions every month, you're paying your copays, and then something big happens. On a copay plan, you have your deductible and then you have your max out of pocket. And those are two separate numbers. So let's just, for ease sake, let's say your deductible is $1,000 and your max out of pocket is $5,000. In between $1,000 and $5,000, you have coinsurance. So you get in a big accident, you go to the emergency room, you have to pay $1,000 out of pocket before your insurance kicks in. Once you reach your $1,000 or whatever your deductible is, you have to pay a percentage of your medical bills. On this plan, let's say your coinsurance is 20%. You're going to pay 20% of all of your medical bills that come through until you have paid $5,000 out of pocket or whatever your max out of pocket amount is on your plan. Once you reach your max out of pocket, insurance kicks in and covers all covered expenses from then on out. So these plans the max out of pocket is typically significantly higher than an HSA plan. So if you're the type of person that you know that you are going to reach your max out of pocket, you know, I'm going to have a baby this year, or I have to have a couple of knee surgeries, or, you know, whatever it is. If you have a chronic illness, if you know that you're going to reach your max out of pocket, it makes more sense to have a lower deductible HSA plan where, you know, maybe the HSA plan has a $5,000 deductible, which not saying 5,000 is low necessarily, but if you have a copay plan that has a $2,000 deductible, but a $9,100 max out of pocket, obviously $9,100 compared to 5,000, it would have made more sense for you to be on the HSA plan.
So is a copay plan typically more expensive than an HSA plan then, or not necessarily?
Not necessarily. If we're comparing like a bronze copay to a bronze HSA, the copay is actually usually a little bit cheaper. And that's typically because the max out of pocket is significantly higher.
Gotcha.
Like for example, with Blue Cross Blue Shield, we oftentimes will have like an $8,100 max out of pocket copay plan, but then you'll have a bronze plan that has like a $4,000 deductible and a $12,000 max out of pocket. And so you really have to play with it. You have to play with the premiums and talk to an agent if you're not sure, because it can get super convoluted. And a lot of times when you're looking at the plan summaries, it doesn't necessarily say HSA eligible. It's just in the language on there that you can you can understand whether or not it's HSA eligible. So typically when you're reading through the plan summaries, which like if you go on marketplace.com and you healthcare.gov marketplace plans, if you click on the plan summary for whatever plan you're looking at, it's going to give you all of the copays and it's going to tell you what's covered. If it says deductible / coinsurance next to like 90% of the things that are listed on there, it's most likely an HSA plan. If it's a copay plan, it will list out the copays for urgent care and the ER and a specialist and things like that.
Okay, I'm a little bit almost sorry I asked that because we just went down a rabbit hole. So if you're like me and your head just either exploded or you totally zoned out for the last 2 minutes, you should just follow Britt on social media. It's your insurance agent, Britt, and she will teach you the ways. Or look her up online and she can just literally do this for you. That is how I do insurance. I find somebody that I trust and then I don't have to know the things. So there is that. If you've already zoned out, that's your play. If not, we'll keep going here. Talk to me about Aflac. Like I have Aflac. I really like Aflac. I know it's not really insurance, but it kind of fits in this. So
Yeah, there's a lot of supplementary plan options, whether it's Aflac or Mutual of Omaha or Guardian. I mean, there's tons of different companies that offer these types of benefits. They are meant to fill in the gaps. So when I am explaining health insurance to people, I oftentimes say it's like a slice of Swiss cheese, right? It has decent coverage, but there's a lot of holes in it. There's your copays and your coinsurance and your deductibles and blah, 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 blah. So Aflac or these supplementary plans come in to try to plug up some of those holes.
I wish they just had one plug for any of the holes.
Yeah, exactly. Like, right. We wish that it was Gruyere instead of Swiss, but it's not.
well, but I think everybody's health is different too,
Yeah.
and so you have
I don't
different
know
needs.
if I'm going to get
Yeah.
cancer or if I'm going to,
Yeah.
Right.
need a limb severed or something.
Well, the way that Aflac was started in the first place is they were a really well-off family. Their dad was, I think he was a lawyer, made really good money. They had good health insurance, and then he was diagnosed with cancer, and they had to declare bankruptcy.
Oh, wow.
And they were like, what the hell? We did everything right. And clearly there needs to be another solution. And so they started Aflac with a cancer plan where it will pay out basically a big lump sum when you're diagnosed with cancer, and then it pays out for all of your treatments. And if you need to travel, it will help reimburse for airfare, hotel, etc. And it's not just cancer. Aflac isn't just a cancer plan.
Well, you have your own personal experience when you had.
Oh, yeah. Yeah, when I broke my ankle, I got about $5,000 from my Aflac plan, and my insurance had already covered most of it. And so then I was able to use that $5,000 to buy groceries and to rent a wheelchair and to get some other things that made my life a lot easier.
Well, that's the ticket about Aflac, right? Is that it pays you, not the
Yes.
doctors. It doesn't have specific bills. You're not submitting for reimbursements. It's literally just giving you cash for things.
Exactly. Yeah. All those supplementary plans pay you cash directly, and then you can use that money however you want. Whether maybe you have a $5,000 deductible plan and you need to help, you need help meeting that deductible, or maybe you've already met your deductible. And so, like I just said, you can make sure that you can pay your mortgage and buy some groceries and take care of yourself with whatever money you receive from them. So it's really meant to make you whole again, to help fill some of those gaps. And they're really affordable. Like the Aflac accident plan that I used for my ankle is about $30 a month. So significantly cheaper than traditional health insurance because it is not Affordable Care Act compliant health insurance. It's just meant to fill in those gaps.
Well, and I think that's a really good point. You talked about having a baby earlier. If you know you're going to have a baby, get a freaking Aflac plan because I have a friend who actually is an Aflac rep. She ended up with twins and they were in the NICU for a long time. That Aflac plan paid her like $20,000.
So it covered the baby too? Babies?
Well, it just covered, it gave her chunks of money that she could use that wasn't tied to any expenses. Like it's kind of what floated their family. So it's a really cool thing. And like you said, it's super affordable. You're talking $30 a month. And if you're an employer that's like trying to add benefits for your employees and you can't do like a full health insurance situation, this is the ticket. Like give them at least something. And you need 2 people for an Aflac plan, right?
Well, for Aflac, you need 3 technically in order to start a group policy. There are individual options available as well. But if you're an employer and you're like, okay, how do I offer this to my staff? You need 3 employees to each sign up for one plan. That can be the same plan, different plans, doesn't matter. And you can offer it for no charge. So if you just want to make it available, but you don't have, the financial ability to contribute anything towards it, you can just make it voluntary where you will basically pay the Aflac invoice and then you will be recouping that money from your employees' paychecks every month.
Right. So it can actually cost you $0, but it can still be a benefit to your employees. So I think that's super cool.
Yeah.
So can somebody qualify if they're already pregnant?
No. So that is a caveat. A lot of these plans have some medical underwriting. So that's a really good point. If you are family planning, definitely talk to an agent prior to getting pregnant because that would immediately, they basically do what they call a 12-month look back where it would be considered a pre-existing condition. And so they won't cover anything for 12 months prior to when it started.
Okay.
Yeah.
So what about for people that are a little bit older and they have Medicare and talk to me about some of the supplement plans there.
Yeah. So I'm not a Medicare rep. And so when it comes to actual Medicare supplementary plans, you definitely want to talk to a Medicare specialist. But basically, there are a lot of different supplementary plans that you can get, just like we were talking with Aflac plans. It's meant to do the same thing for when you're on Medicare, where they help to fill in a lot of those gaps that your Medicare coverage has. You can also have Aflac plans oftentimes when you're going into retirement. So what we see in our office a lot is people will have kind of a combination of their Medicare, a couple Aflac plans, and a couple MedSup plans.
That makes sense.
Yeah. And then with Medicaid, Medicaid is meant to cover low-income individuals or people with disabilities. Typically, that will cover most, if not all, of your medical expenses. And so that's a really good time to get an Aflac or a supplementary policy in place, or maybe get some dental and vision coverage on yourself. Obviously, if you're super low income, you don't have any extra money to expend on that. But if you have $30 a month just to get a little bit of extra cushion of protection, it can go a long way.
What's an indemnity plan? I have U.S. Health, and I have a lot of questions for you after this.
So there's some companies out there that will sell you a policy that is an indemnity plan. U.S. Health is one of the companies that does this. This looks like regular health insurance, but it's not. So for example, they will pay, let's say, $100 for you to see your primary care provider. Now, if your visit was $30, they'll pay you $100. If your visit was $500, they'll pay you $100. So they will pay you just a set dollar amount for whatever the service is. But when you read through the fine print, let's say it might say like hospitalization, $5,000. What if you're hospitalized for 365 days? If $5,000 is the maximum amount that you're going to get out of that plan, you're going to have to declare medical bankruptcy. You know, there's a big gap in plans like those. So that's something that's really popular right now, because with the Affordable Care Act changes coming, which one of the big ones is that basically the supplement that you were getting, where if you logged in, you put in your income, they had been giving people extra money during COVID because they were trying to help make sure everybody had healthcare coverage during COVID. That is now going away. That extra stipend is going away. So a lot of people's plans are about to become more expensive in 2026. So because of that, there are a lot of agents that are really pushing these indemnity plans that are like, it's cheaper than anything else you can get on the marketplace. Well, yes, and it's cheaper for a reason. I just had it quoted. My policy, for example, on the marketplace was about $450 a month. My plan through U.S. Health was about $250 a month. But when I read through the plan documents, I was like, well, if I end up having a huge accident or I'm hospitalized for a long period of time, I'm going to be screwed. So just be really cautious. If you get a plan like that in place because you can't afford anything else, be careful.
Interesting. Okay, that's really important to know.
Is there anything for the average husband and wife without kids?
Absolutely. Yeah. I would say you can get, it depends on your situation. So let's talk about where you can get an insurance plan. You can go to healthcare.gov, which is the insurance marketplace. It will pull up all of the eligible plans that are in your area through United Healthcare, Blue Cross Blue Shield, Mountain Health Co-op, Pacific Source, all of the major carriers in your area. Words are hard. And it will show you what the costs are for each of those plans. And you sign up for it during open enrollment, which starts on November 1st every year. You can start shopping November 1st, but your coverage doesn't kick in until January 1st. And then you're locked into that coverage for that full plan year, unless you have a significant life event, being get married, get divorced, have a kid, adopt a kid, move, change jobs, significant life event. You can, if you look up on Google qualifying life event, it will give you a list of what you can have happen for that.
And by the way, I think that's a really important thing, because when you have those life events, sometimes you're really busy and you don't think about the fact that you should be adding somebody to your plan. But I have a friend that just had a baby, and she kept telling her fireman husband, like, you need to add the baby, you need to add the baby, you need to add the baby. And he didn't. And then he missed it. And then the baby had some things and they weren't covered. Yeah. So that needs to be on the priority list. If you do have a life event change and you need to get somebody covered, make that a priority and make sure you get that done.
Yeah, you typically have 60 days from the date of whatever the significant event was to get them added to the plan, and they will typically be added on the first of the month following, whenever you get them enrolled. So make sure, like, if you know you're going to be losing coverage, maybe you're turning 26 and you're about to be off of your parents' health insurance, start shopping before you lose coverage so that you don't end up with a gap in coverage. Now, you can also get your health insurance through an employer. There are a lot of rules around employer coverage. So the minimum that they have to provide towards your policy as their employer contribution is 50% of the lowest level plan that they offer. So a lot of places will offer like a bronze, silver, and gold plan. They are only required to pay 50% of the bronze plan on the employee's coverage. They don't have to provide anything towards spouses or kiddos.
But that insurance coverage can vary wildly from employer to employer, right?
Yes, absolutely. I mean, they have way more plan options than what you see on the marketplace. And so it can drastically vary. And what it's based on is the age of the employees that enroll. So honestly, it's kind of funny because it encourages employers to be ageist. Because if I were an employer that wanted to provide awesome health insurance for my staff, I would hire really young people. Yeah, exactly. But oftentimes, as the employee, you end up getting better coverage than what you would get on the marketplace, and you're paying less for it because your employer is contributing a chunk towards it. You only have to have 2 employees to provide one of these plans as an employer. The third option is through a broker, where a broker can shop all of the marketplace plans, but they can also shop some stuff that's not on the marketplace, and they can shop directly with the carriers and have some options that you might not see through healthcare.gov. And then the last option is through a spouse's employer. If you have shopped all of those options and don't have anything that you like, sometimes maybe your spouse has something through work and maybe they do have a spouse contribution, or maybe it's just a much better plan option. So those are the 4 main places that you can obtain health insurance.
So I have a story around that. So one of my coworkers had her and her spouse on our company insurance, and then her husband started working again, and he was working through the city that they live, and so they transferred to his insurance thinking it was going to be better. And then they found out that a medication that he was on, which was extremely expensive, was not covered by his insurance. And they were committed to that for a year. And we're talking like $6,000-$7,000 a month is what this medication costs a month. And so then they were like scrambling and trying to backtrack and wanting to go on that. So you might hate this question, but how do you prevent that from happening? Like, what do you do if you're going to switch or you're shopping plans and you need to know? Can you like ask in advance? Is there somebody you can call and be like, here's a medication I take every month?
Yep.
I need to make sure it's covered.
This happens all the time at our office. So oftentimes if you go to the carrier's website, you can type in, like, you can do a search on their website for any prescription, and it can tell you what the coverage would be. Especially if you know what plan is being offered, you can type in like the code for the plan, and it will tell you specifically what your plan does or does not cover for that medication. I recommend reaching out to a rep. So like if you called me, I have a rep at Blue Cross Blue Shield that I love dearly. She's amazing at her job. She knows her shit. And I can just call her and say, how do I go about finding out if this is covered? And she will direct me to the right place. So that's where it's really nice to have a broker, because then you're not just calling 1-800 numbers and being bounced around all over the place and hoping that, just hoping and praying that you're covered. You have somebody that can kind of do that heavy lifting for you. But I do highly recommend just making sure that it's covered ahead of time. And then also when it comes to, just shopping around the plan itself, like if you're trying to decide, is this plan better than the plan that I'm on right now? What can get a little bit funky is if you have already paid a bunch of money towards your deductible and you're on an individual plan, it does not make any sense for you to switch to a group plan, because you're going to have to start back over on your deductible if you're in the middle of the year. Like if your employer's plan doesn't start January 1st, then you're starting your deductible back over whenever you switch to that plan.
Okay, I'm going to give a shameless plug for Britt because she will not do this for herself. But like, I think having a person is the answer, right?
Yeah.
Like this literally makes my head explode and it makes me want to cry a little bit.
I'm getting a headache.
To try to like want to figure this stuff out. But I've heard stories that you have helped people and you've gone to bat for people and you've gotten things covered. So find a good agent. Hopefully it's Britt. Britt, what states can you help people in?
Mostly right now, Montana, Wyoming, and Idaho.
Okay.
When it comes to Aflac, I can write it in all 50 states, and then I can typically at least answer questions and look at your plan documents if you're elsewhere. But yeah, I think it's just really important to talk to somebody who knows their shit, because I could talk about this around the campfire. Like, I would talk about this all day long and everyone around me would be sound asleep. And I'm having the time of my life over here.
On her social media, she does cute videos now with little tidbits of this knowledge. So
Yeah,
do go
definitely
look
worth
for
a
her.
follow.
Yeah.
I feel like I'm the average person, at least in Montana, where I'm self-employed, but I have my own LLC, and then my husband doesn't get covered at work. So he's on a health share and I'm on the U.S. Health
I think
plan
that's
with no deductible that doesn't
mean,
cover anything.
there's a lot of people that are in that situation. There honestly aren't very great coverage options
No.
for self-employed individuals with no employees. It's, you kind of just have to shop around like an individual on the marketplace and hope for the best. And I'm hoping that that will change and that some shifts will happen in the coming years for self-employed individuals, because there's a lot of people that are moving towards those indemnity plans right now for that reason, because they don't want to go with no coverage, but they also don't want to pay $700 a month. So I feel you. Yeah.
So we'll
let me
get together.
let me ask you this question. I have like an HSA plan through work, and then like my daughter goes to physical therapy, and then I get this bill, and it's like, here's what your cost is, here's what the insurance allowable thing is, and like now here's how much you owe me. So I feel like this entire system is a full-on scam.
Yep.
And like if you go to the doctor and you tell them you're paying cash, you're probably going to get a lower price if you tell them you have insurance. But how does this work? Where I'm like, this is what I want to bill your insurance, but the insurance is going to limit it to this. Like, unpack that for me.
Yeah. So I always, when I'm working with people, I'm like, trust me, I think insurance is as much of a scam as you do. I just understand it very well. So
Well said.
there are in-network and out-of-network providers with every insurance carrier. And basically what makes a doctor or a hospital or, whoever it is, an in-network provider, they have basically negotiated a rate with the insurance provider. So let's say Blue Cross Blue Shield says we are going to pay $100 for a physical therapy session, regardless of what happens in that session. I'm just making these numbers up, so don't sue me, Blue Cross Blue Shield. Then if you go see a physical therapist that is in network, they're going to charge $100 and ideally, and it's going to be fully covered. Well, if you go to an out-of-network provider that charges $200, Blue Cross's negotiated rate is $100, so you're going to be balance billed an extra $100. That's just like very basic in-network, out-of-network. But like you said, okay, I'm going to go to the ER and I'm going to tell them I'm paying cash and I'm going to get a $250 bill from them. Yeah. But then I'm like, oh, I forgot to bill this through my insurance. And so they bill it through your insurance and then you get a $500 bill. And you're like, well, what the hell? I gave you why is it more expensive? I honestly have no idea. I think
because they can.
Exactly. Well, and what's frustrating with HSA plans with that is they're assuming that your insurance company is going to be fronting the bill. And so they can jack those prices up. But if you have an HSA plan, you're still paying for that out of pocket until you meet your deductible. So it is interesting because with an HSA plan, you go to the ER, you give them your insurance card, they bill everything through insurance, and you get a quote unquote insurance discount, and then you'll receive the invoice that you need to pay.
That's all I got on my last bill. I called them and said I need an in-network physical therapist or podiatrist. There were no podiatrists here. They've all moved.
Weird.
So
Welcome to
Bozeman needs
Montana.
podiatrist. So I got an in-network physical therapist, went there. My bill came last week and it said we've negotiated this rate for you. That was it. They didn't cover anything. And that's what my bills always look like.
It is very much plan to plan. They're all very different. Depending on where you live, they look very different. If you're in rural areas, it can be really hard to get in network providers. And so I think it's important to have somebody that can go to bat for you, because it can get very convoluted, as you're hearing right now. I mean, there's a lot of unknowns. I feel like knowing the industry very well, will get a bill sometimes from the doctor, and I'm like, what the hell is this? And so I think it's just important to be able to call. And if you don't have a broker, that's okay, but don't be afraid to pick up the phone and fight for yourself and talk to Blue Cross Blue Shield and ask all the questions, and then talk to your provider and ask all the questions, because we're all human. And sometimes somebody working at that hospital or working for your carrier genuinely makes a mistake and are willing to fix it for you. So I would say always advocate for yourself. Don't be afraid to feel stupid and ask dumb questions. There are no dumb insurance questions. Insurance is so confusing, even for those of us who know it very well.
Well, and I think you catch more flies with honey.
Yeah.
Absolutely. I agree.
So when you call, be a person, be nice, and you'll probably have a better chance of dealing with them than if you just call and you're instantly pissed off.
Yeah, 100%. I know I'm more willing to help people when they're being nice.
Absolutely.
You yell at me, screw you. I'll yell back.
Yeah, I will fight back. I'll get spicy quick.
So to wrap up, what are the extras like the vision, dental? When do you need any of them? Disability?
Speaking of
life insurance?
scams.
Yeah, right. So dental and vision insurance are kind of a joke, honestly. If you wear glasses and contacts, vision insurance is a good thing for you to have, because they will cover your eye exam every year, and they will cover typically like $150 towards frames, and then they will cover the lenses in your glasses. So if you're wanting to get glasses every couple of years, that might be a really great plan for you, because it's typically like $8 a month. If you don't have bad eyes, if you have 20/20, do not get a vision plan. It doesn't make any sense. You can go get your eye exam every once in a while and you're good. Dental insurance is really odd.
That's nice.
Yeah, it's okay. So if you go in for your cleaning, they're typically going to cover 100% of your cleaning once a year, twice a year, depending on your plan. They'll cover 80% of any basic care, like fillings. And then they will cover 50% of any major care, like extractions or crowns or implants, etc. Now, that 50% though has a maximum. So for example, if your dental policy says $1,500 max, it's not the same as your health insurance, where the max is the maximum amount that you pay. On your dental insurance, the max is the maximum amount that dental insurance carrier is going to pay. So the most that they will pay you, regardless of how many claims you file, is $1,500 or whatever it lists on your plan. So I typically recommend to people, if you need to have like multiple crowns done, get one in one calendar year and the next in the next calendar year, so you can max out that benefit as much as possible. But know that you're going to be paying at least 50% of what you're billed on that, even if you have dental insurance.
And dentists like to do fillings and crowns a lot.
Yeah, I do. I recommend Care Credit. If you've never heard of Care Credit, not everybody's eligible, but you can apply for Care Credit. So if you need to have a lot of dental work done, it's basically a 0% interest credit card, as long as you pay it off in the timeline that you choose. If you say, I'm going to pay this off in 12 months and you don't pay it off in 12 months, they're then going to back charge interest for the full 12-month period.
Probably like 25%.
Yeah, exactly. But I used it when I got my LASIK done. I have used it in the past when I needed to have a bunch of crowns replaced. And it was great because I was able to make payments on it for a few years, and, didn't have to pay interest. I was just paying the actual balance that was due to the provider. So that is one of the only best options if you need to have a lot of dental work done.
So
And
this,
will your dentist offer that to you, or how do you find Care
I've
Credit?
never heard of it.
Yeah, you can just go to carecredit.com. A lot of providers have cards advertising it at their desk. It's not something that you get through the dentist. It's something that you apply for independently, and then you would just get a Care Credit debit card. Renee is over here fist fighting our microphone.
I'm sorry. I got excited.
I've done it once or twice.
And then there are a couple other types of policies that are available.
And now Courtney's choking.
We're a mess
Welcome
over
to real
here.
life. We promised to keep this short and we totally failed. So welcome to it.
We're never talking about insurance again. The last few plan types that are available are just supplementary. There's disability plans, life insurance. There's all sorts of types of plans that you can use to fill in the gaps, especially if you're an employer and you're really wanting to provide a broad employee benefits spectrum. there's a lot of options out there that are so much cheaper than you think they might be. For example, you can get $50,000 of life insurance on each of your employees for around $6 a month in a lot of cases. Wow. So just know that even if you can't provide full health insurance for your staff, that doesn't mean you can't provide them anything.
So when I started choking, I was going to say, this makes a lot more sense to me, at least to know what questions to ask now. And it seems like if I was to have an insurance plan where I was able to have an HSA and that rolled over and created a bigger balance of money that I could put towards things like crowns or whatever, and then you have an Aflac plan for the emergency, I probably would not do cancer because it doesn't typically run in our family, but
I mean, it's like 1 in 3 people.
Yeah.
Really?
Yeah. It actually is, right? Like
I want to say it's 1 in 2 women and 1 in 3 men or something like that.
It's crazy.
Yeah.
For $20 a month or something like that. I mean, you can take it or leave it. For me, it's like, I feel like all of this stuff is peace of mind for me, even disability insurance and life insurance and all of that stuff.
Ideally would love to have all of it, but
right.
It's expensive.
Just take my paycheck.
Yeah, and especially life insurance. And we did a whole topic on that before, so go find that episode. But I do think it's very individualized, which is why it's important to have a person. So if you are in Montana, Wyoming, or Idaho, I highly recommend you just call Britt, and you could have just fast forwarded this whole episode and let her do it for you. But
yeah, that's what I'm going to do. But for now, I know what to ask.
Yeah.
So how do they, if somebody is not in one of those 3 states, how do they find somebody good?
I would say the biggest place to start, honestly, is just online, just Googling like local health insurance brokers. But something that is really popular around here is you probably have a Facebook page like Ask Bozeman where you live, where locals can ask questions and people will be shouted out on places like that. When you go to healthcare.gov, it will typically have some different people listed on there too that you can call, some local people that are available to help you out. I don't remember what the term is right now off the top of my head, but there's a name for them that can help with marketplace coverage.
Can you refer people out of state?
Yes, absolutely.
Okay. Awesome. Well, thanks for tuning in. If you're still here, good job. I'm impressed.
You
get
learned a lot.
Gold star on your homework. And thanks for being here. We appreciate you. If this was helpful, please forward this to somebody else. Like, share, subscribe. We're literally here just to add value to you. So let us know how we can do that. Comment below if you have brilliant ideas for us or if we did something helpful. And here's to empowering each other one story at a time.
One health insurance policy at a time.
Dun, dun, dun.